Hello everyone. Welcome to the GST tutorial series on Goods and Services Tax Network, that is, GSTN, presented to you by Spine Software Systems. You are with me, Untitled Chapter. In this tutorial, I will introduce the basics of GST. So, after this video, you would know what is GST, and how is it different from the existing tax structure. We will cover two main aspects. First, how does pricing work in the current tax system, and then, how is it different from the pricing in the GST system? But first, let us consider a system, so that we can understand pricing in that system. Any system comprises of two types of people, buyer and seller. And two types of commodities are traded, goods and services. Let us assume that Virat Kohli wants to buy a Ford Mustang. So, he would go to a showroom. The showroom is the first level of purchase, that we can call as the retailer. Kohli, the buyer, selects and buys Mustang, the good, from the retailer. If Mustang is unavailable, the retailer asks the distributor for the car. The distributor is the next level in the chain. Think of a distributor as a big retailer, who stocks goods, so that they can be sent to multiple retailers. So, if the distributor has the goods, which is Mustang in this case, then he would send them to the retailer. This is shown here, as Mustang is being transported from the distributor to the retailer. Once the retailer, or the showroom receives the goods, Kohli buys Mustang. However, if the distributor does not have the goods, he would ask the manufacturer, or the company, Ford, in this case. The visual shows a general outlook of the production line of a manufacturer. Once the manufacturer receives the order from the distributor, it packs and sends the goods to the distributor. This is the flow of goods from the factory, or the manufacturer, to the distributor. Once the distributor receives the goods, that is, Ford Mustang, he intimates the retailer. Then, the goods are transported from the distributor to the retailer. Finally, as the retailer receives the goods, the buyer can buy it. This is a general cycle for goods. Now, let's consider the second type of transaction, which is for services. If Kohli's car breaks down, he needs to get it serviced. So, he goes to the workshop. The workshop is the service provider and Kohli is the service recipient. Once the repair is complete, Kohli gets the serviced car. We will consider this system for understanding pricing in the later part of this video. But first, let us understand the current tax system. For the sake of simplicity, we will touch on excise, VAT, GST, and service tax only. Otherwise, there are a lot of taxes in the existing system, as shown here. Let's talk about excise first. Excise is charged, or levied, on the manufacture of goods. So, whenever you manufacture, you pay excise. This tax is paid to the tax authorities at the center. So, if you are manufacturing in Punjab, you pay excise to the Central Excise and Service Tax Department. And, if you are manufacturing any good in Maharashtra, you pay excise to the same department at the center. The same holds true if you are manufacturing in any state in India. The tax is always paid to the tax authority at the center. Now, let's consider GST. The central sales tax is levied on the interstate sale of goods, and the tax is paid to the respective state tax authority. So, if you sell from Punjab to MP, then, the tax is paid to the Punjab Excise and Taxation Department. And, if you are selling from MP to AP, tax is paid to the MP, Excise and Taxation Department. Third, let's talk about VAT. The value-added tax is levied on the intrastate sale of goods. Similar to GST, it is also paid to the respective state tax authority. So, if you are doing an intrastate sale from Gujarat to Gujarat, you pay VAT to the Gujarat Excise and Taxation Department. Similar holds true, if one distributor sells to a retailer within Gujarat. Now, let's talk about the tax levied on services. Just as we had excise, as the tax levied on the manufacture of goods, we have service tax, as the tax levied on the sale of services. Service tax is also collected by the tax authority at the center. So, if you are providing medical or retail services in UP, you pay the Central Excise and Service Tax Department. The same holds true for any other state. It also pays the service tax to the center. Similarly, service tax collected, on any service provided in any part of India, is paid to the tax authority at center. These are the four main taxes we will consider for this tutorial. Now, let's get into the pricing in the existing tax system. For the sake of simplicity, Consider the production cost of Mustang as 10 lakhs. Let's say that the manufacturer adds 10% margin on Mustang. So, the price of the good becomes 11 lakhs. Since we are manufacturing, so, we would charge excise on the manufacture, and 12.5% excise to that value. This makes the selling price of Mustang as $1237,500. Let's say that Mustang is being sold interstate. So, CST of 5% would be added. That would make the total cost of the car to be ₹1299,375. This value is what would be charged from the distributor through the invoice. Now, the tax component of excise is paid to the Central Excise and Service Tax Department, as discussed previously. And CST is paid to the State Excise and Taxation Department. So, this invoice is sent with the goods from the manufacturer to the distributor. The selling price of the manufacturer becomes the cost price of the distributor. The invoice received by the distributor has three parts: cost excluding tax, the tax, and the cost including tax. The distributor leaves the tax component aside, and adds a 10% margin on the cost excluding tax. This increases the price of Mustang to $13,62,250. Now, let's say that the distributor is selling in the same state. So, 5% VAT is charged. This makes the selling price for the distributor as ₹1429,313. This is the value which the distributor will charge from the retailer. It is important to note that the distributor would collect the VAT from the retailer. It is included in the selling price. As per the rules of VAT, we pay tax only on value addition. Since the distributor has already paid CST when purchasing Mustang from the manufacturer, he has to pay the difference. So, the tax payable by the distributor reduces to ₹6,188. This tax is paid to the Excise and Taxation Department in the distributor's state. Finally, this invoice is sent to the retailer. The selling price of the distributor becomes the cost price for the retailer. Once again, the invoice received by the retailer has three parts: cost excluding tax, the tax, and the cost including tax. The retailer leaves the tax component aside, and adds a 10% margin on the cost excluding tax. This increases the price of Mustang to $14,97,375. The retailer mostly sells in the same state. So, he would charge VAT of 5%. This makes the selling price of Mustang as ₹15,72,244. This is the value that the retailer will charge from the buyer. Again, as per the rules of VAT, you only have to pay the tax on value addition. So, the retailer would reduce the tax which he has already paid to the distributor. Hence, the tax that he has to finally pay to the state tax authority is ₹6,806 only. The retailer, or the showroom, pays $6,806 to the state tax authority, as shown. So finally, this is the invoice which makes the MRP, or the maximum retail price of Mustang. Hence, what started with 10 lakhs in the factory added on to become around 15 lakhs and 70,000 at the retailer. This is the price that Collie has to pay for the Mustang. The sale projections and profits are calculated based on this costing. Next, let's talk about car service. Suppose the service cost, including all heads, comes to around 1 lakh. The service provider, which is the workshop in this case, adds a 10% margin on the cost. This makes the price of service to be ₹1,10,000. Add 15% service tax to that, making a total of $126,500. Through this invoice, the value of service tax, collected from the service recipient, is paid to the Central Excise and Service Tax Department. So finally, $126,500 is the service price for Collie, for the repair of his car. This concludes the pricing in the existing tax regime. We are halfway through the video. Let's get started with the pricing in GST regime. As it is very evident, with a change in tax system, the pricing would vary. And the sale projections would also change, as we would see in a moment. But first, a major change. In the GST regime, all the taxes would be subsumed in GST. Well, almost all. So, this would greatly simplify the taxation mechanism. So, what is GST? Well, GST is a tax on the supply. Note that it's supply, and not sale, or purchase. The tax collected in GST is not paid to any department. Rather, it is paid on the GST portal, which is the GST website, www.gst.gov.in. Since GST is the tax on supply, all the previously used terms like manufacture, sale, purchase, go away. There would be only two types of supplies, inward and outward. So, it will either be inward supply of goods and services, or outward supply of goods and services. Let's talk about the types of GST. For interstate supply of goods or services, the taxpayers would pay IGST. And for intrastate, or the same state supply, they would pay SGST and CGST. Mathematically, IGST equals SGST plus CGST. There are 5 tax slabs in the GST regime. 0% or exempt, 5%, 12%, 18%, and 28%. So, if a good or service comes in 12% slab, and if it is sold in the same state, the SGST would be 6% and the CGST would be 6%. Now, let's talk about our previous tax systems. Excise was tax on manufacture. Manufacture is no term in GST. So, this goes off. CST was the tax levied on interstate sale of goods. Sale is no term in GST. So, this also goes off. VAT was levied on intrastate sale of goods. Again, sale is no term in GST. So, this goes off. Finally, service tax was on sale of services. Since there is no term as sales in GST, this also goes off. Let's look at the new definitions of GST. First, let's discuss interstate supply of goods. Whenever we have interstate supply, like from MP to AP in this case, we would pay IGST. This IGST is paid on the GST portal. Now, for an intrastate supply, or a supply within Gujarat, the tax is paid in 2 heads, CGST and SGST, on the GST portal. Finally, the taxation in services has changed completely. Previously, it was paid to the center. Now, a supply of service has been put at par with that of goods. If it is interstate supply of services, IGST is charged and is paid on the GST portal. And, in interstate supply of services, like in this case, supply of services within UP, the tax is paid in 2 heads, CGST and SGST, on the GST portal. Now, let's look at the revised pricing in GST regime. For simplification, we would assume that the manufacturing cost of Mustang stays the same. Although, this may also change, since the tax on raw material would change. The manufacturer adds 10% margin on his cost. Previously, this made a price of 11 lakhs. We had charged excise on it, making a total of 12,37,500. We had charged VAT over the value of excise. That had led to double taxation. But now, excise would not be levied in GST. So, this part would go off. That's why we say that GST would remove tax on tax. Hence, the price would reduce to 11 lakhs. Now, since we had charged CST initially, let's take an interstate supply. So, an IGST of 28% would be charged. This makes the selling price as 14 lakhs and 8,000. This is the updated invoice. The IGST charged from the distributor would be paid on the GST portal, in the IGST head. This is then sent to the distributor, with the goods. The selling price of the manufacturer becomes the cost price for the distributor. Once again, this cost is divided in 3 heads, cost excluding tax, the tax, and the cost including tax. Leaving the tax component aside, the distributor would add a 10% margin on the goods. This would make the price of the goods as 12 lakhs and 10,000. Just as we had done previously, the distributor will supply the goods in the same state. So, he would charge CGST and SGST. Since the tax slab is 28%, he would charge 14% SGST and 14% CGST. This makes a total of 15,48,800. This is the invoice which would be sent to the retailer. Now, similar to what we had seen in case of that, tax is charged only on value addition. The distributor had paid 3 lakhs and 8,000 in IGST. Now, he has collected a total of 3,38,800 in SGST and CGST combined. So, he should only pay the difference. As per the credit mechanism in GST, the credit of IGST should be used for the payment of IGST. If there is no liability of IGST, then, it can be used for the payment of CGST and SGST. So first, we would deduct the CGST liability from the IGST credit. This makes the CGST payable as 0. Now, the IGST credit balance is 1,38,600. Reducing the SGST liability using this IGST credit, we have the SGST payable as 30,800. So, this is the total tax that the distributor needs to pay on the GST portal. So, he doesn't pay anything in the CGST head, and pays 30,800 in the SGST head. Next, this invoice is sent from the distributor to the retailer. The selling price of the distributor becomes the cost price of the retailer. Similar to the previous case, the cost price breaks in 3 parts: cost excluding tax, the tax, and the cost including tax. Leaving the tax component aside, the retailer would add a margin of 10%. This would make the price of 13,31,000. Again, the retailer, or the showroom, supplies in the same state. So, add 14% CGST and 14% SGST on this price. This gives the price of outward supply of goods as 17,03,680. This is what would be charged from Collie. Now, let's talk about the tax payable by the retailer. Summing the values of tax collected and paid, he has collected 372,680 in CGST and SGST, and had paid 338,800 to the distributor. So, he only has to pay the difference. Deducting CGST collected from CGST paid, and SGST collected from SGST paid, we get CGST and SGST payable, each 16,940. THS is paid on the GST portal, in the respective CGST and SGST heads. Finally, this is the new MRP of Ford Mustang, in the GST regime. So, what costed $15,72,244 in the existing regime, will cost $17,03,680 in the GST regime. Obviously, since the prices have changed, the sales projections would be re-evaluated. Lastly, let's talk about the difference in the pricing of services. Again, suppose that the service cost stays the same. So, the service provider adds 10% margin on its services. This makes a total of 1,10,000. Let's say that the services are taken from a different state. So, IGST would be charged. That would make the price of outward supply of services 1,29,800. From this invoice, the IGST component of 18% would be paid on the GST portal in the IGST head. This is what would be charged from Collie for the repair of his Mustang. So, what costed 1,26,500 for car repair in the current regime, will now cost 1,29,800 in the GST regime. The final bit for the conclusion. As seen, the prices of luxury cars are expected to rise in the GST regime. The prices of travel are also expected to increase. Construction material and electronics are expected to get cheaper in GST. That's all for this video. Thank you for watching. To know more about GSTN, please watch our other videos, in which we have talked about the return filing and payment making process in the GST system. This video is brought to you by Spine Software Systems. If you have any queries, feel free to email us at gst@espine.in. Demand bill. Enrich India. A CSR initiative by Spine Software Systems.